The value of commercial property is appreciated by as much as 15% in the last year, driven by higher preference by business owners in East Africa to buy their property as opposed to rent it out. The gains place commercial property as a leading asset class for investors. Let's head over to Nairobi, Kenya. We're in CNBC Africa studios where Laila Macharia, who's Managing Director of Scion Real, is standing by. So Laila, Happy New Year to you. Thanks for your time. Tell us why it is that real estate continues to perform well. Despite the stock exchange not doing particularly well, property developers are getting some good returns.
Yes, the real estate market is still quite robust. With the stock markets not doing very well, we are seeing much more interest in the property markets. We have some of the large firms actually shifting their interest more to the property markets to kind of make up for some of the hit that they're seeing in other sectors. It's important to point out, though, that the overall investment outlook still seems quite positive across sectors.
You know, what we are seeing, obviously, with everybody concerned about interest rates, is the borrowing costs that have risen in general. You know, to get a mortgage in Kenya, to do business in Kenya, it's become quite expensive. How does that translate into the property sector? Because certainly a lot of developers need to get loans from banks, and if you're going into residential, you need to get a mortgage from the bank. So in that context, how attractive will property continue to be?
You're absolutely right. We have seen our interest rates double over the last few months, part of the central bank's efforts to slow down a very high rate of inflation that we witnessed last year, and also to try and tame the escalating currency depreciation that we saw in Kenya, also in other parts of Africa, but in Kenya. And it has had a bit of that effect. We've seen the currency rate stabilize somewhat. But the flip side of that is that we have seen reduced borrowing across the sector because of the high interest rates. We do expect the property market to be affected by this, of course. Although the long-term outlook remains strong, we do think that this year we'll see a bit of a hit with a bit of a cooling in the price escalation that we've seen in previous years.
Now, Laila, despite the returns of 16% in real estate, we're told it's still a difficult business to get into as a property developer, largely because a very small component of bank lending goes into the sector. If you're a property developer, you've got to be able to find your money elsewhere, not look to the mainstream sources like banks. So where do they find the money? How do they set up shop?
It's a great question. And we have come to realize that a very large portion of our economy as well as our financing is informal. So the mortgages, for example, are, they say that we have about, 13,000, maybe 15,000 mortgages now in total in Kenya. And we know that we've had robust growth. So what that tells us is that most people are finding alternative ways of financing. Now, for informal developers, people who are doing small multi-unit buildings, then the very mainstream lending might not be a factor. But for large developers who are formal, definitely most of them get their financing for property from the banks. So we are expecting that this will have an effect. But overall, for the growth of the sector, we do expect that to remain still buoyant, although affected by this somewhat.
All right, let's talk about those big developers and companies in general. We've seen a huge impetus, for instance, of if I think of Sasini, a tea manufacturer, moving into real estate, selling off some of its coffee plantations for real estate developments. This increasingly seems to be the trend. Why are companies moving in this direction? Obviously, it's the buoyant market, it's the returns, but why would a company move from its core business, agriculture, into property?
Okay, so there's a number of factors that are affecting this. The first one, of course, is that the long-term fundamentals of our economy point to a very sustained boom in real estate over the next few decades. We've talked about this before, the strong urbanization rate, household formation, strong economic growth, and a very fast-growing middle class. So anybody who's an investor right now looking at Kenya or even East Africa needs to be looking at real estate. A lot of these large firms that had, coffee farms and sisal farms and the rest have very large holdings of real estate, of land, which in the beginning might have been idle, but over the last 10 to 15 years have become very, very valuable. And from an economic rationality point of view, you see that many of them will start looking at real estate as the best way to optimize their returns now.
Okay, also we're seeing for new developments, companies opting to buy land and build their own office blocks as opposed to rentals. So we are going to see lower occupancy rates on the rental or tenant front, but on the ownership front, growth. Explain that discrepancy to me.
Now, this is quite disputed. As you know, in Kenya, we're only now starting to get a housing index going, as well as a national housing survey with robust data. And as I said, a lot of our economy is still informal. So some of these statistics are still quite controversial. We found many times people looking at formal statistics and saying it can't be possible that there's very much more left in this market, or more people left to buy houses, for example. And then the reality tends to be quite different for that. So we do know that we have a very big gap in data, and many times when people predict that there's going to be empty office blocks, it doesn't quite pan out that way. However, it does make sense for some people to buy office blocks, and the reason why they do this is that when they look at the last 10 to 15 years, and they think if we had bought an office at that time, we would have made this huge equity uplift. So people who would otherwise not have considered that as a strategy are having second thoughts now and buying office space. And that's the reason that you're seeing driving that more.